What's up, everybody? Welcome back to Earn It, Save It, Invest It. Merry Christmas, Happy Holidays. It's the end of the year, and in this video, I'm going to break down a stock that I think is going to double up. It's going to go up 100% next year in 2026. So I'm going to just kind of break it down, get into it. If you can, please give me a like and subscribe. If you do like my stuff, I'd really appreciate it. And yeah, let's get into this stock that I believe is going to go up 100%. And that stock is TTD, the trade desk. Let me break down exactly why I think it is. Now, this is my personal portfolio that I have going on, my 100K challenge. Right now I have TQQQ, HIMS, Meta, Celsius, Amazon, Fubo, Nike, Adobe, and Hesai, and some cash. So as you can see, I am not currently... I'm not invested into TTD, but I actually am planning on starting to make some purchases of the stock. And let me again break down why I think it's going to double up and go 100% at least in 2026. As you can see, even right now, oops, hold on, my battery is about to die. Oh no. Want that to happen. So TTD is at $38 and the PE is at 21, right? That's actually pretty low. It's not that high compared to a lot of other stocks out there, but it also isn't, you would say, well, it's not growing as high as other, stocks. And it actually has it's a double-digit growth stock. So I'm going to break all this down though right now. One article that I read really breaks it down very efficient. The trade desk, what the headlines don't tell you. The stock is down 71% from its high, the biggest drop since it became a public company in 2016. Optical 17% revenue growth is actually 22% if you adapt for the political spending last year. There are problems with the rollout of the trade desk AI-driven Kakai platform, but those seem to be addressed now. Competition from Amazon and walled gardens is overstated. At the current price, Trade Desk is a strong buy. So we're going to kind of break down exactly why, kind of technically. And if you look at the, if we look at the chart, right, just looking at this chart. Oops, sorry, this is actually Nike. Another stock that I am looking. The trade desk, its stock price has gone down significantly recently, right? When you look at the chart, it has gone down really significantly. In fact, let's go and put a number on this. Like it said, 71%. That was when that article came out. It is down 2%, right? So it is down 72% from its high. And that high is of last year, almost exactly 1 year ago, about a year and a month ago. Ever since then, it's been on almost a free fall. I mean, this was a free fall, right? In February, that was kind of when everyone had a pretty big crash. And it crashed really heavily. And it went from 138 all the way down to, obviously higher than what it is now, 44. Then it bounced back up to 86, but couldn't even break 100. And now it's fallen down to 38. They've had the issues with the Kakai platform where they were having some issues, and that's been addressed. But let's go actually back into what that article states and kind of technically break it down. This has been the biggest drop since it's become a public company. The revenue, this is from the latest numbers, 739 million, which was a 17% year-over-year growth, which is pretty good. Its non-GAAP EPS is 45% or 45 cents, beating consensus, and its adjusted EBITDA is 317 million, which the EBITDA margin was 43%. Now, if we just look at really, let's look at the kind of the breakdowns of this, the simple stuff, right? Just the kind of the summaries. If you don't know what Trade Desk is, let's actually go and see what this is. A Trade Desk operates as a technology company in the United States and internationally. The company offers a yeah, I could actually, it basically allows people to buy, manage, optimize, and do all this stuff with ads. When you see ads all across TV and the radios and everything, they're the ones who are really doing a lot of like who's buying what and why and this and that. Right now, there are a few that don't, like Amazon and Google, who kind of do a lot of their own stuff, but the Trade Desk handles a lot of other media outlets. If you look at the earnings estimates, continuing to grow year over year. Now, obviously, it's saying the sales is not going to be is growing as much as the EPS, obviously, which that's fine as long as the earnings per share is growing. You still want the sales to grow, obviously, but it says the valuation. Now, here's the thing. When you have a high growth company, a lot of the times valuation is going to go down. It's just how it is. But it's going, it's 20%. It's, that's decent, right? The profitability, though, is something you want to look at. Its gross profit margin is 78, almost 79%, but they net still about 16, which is pretty good, right? So they're netting a decent amount, and that's just to break that down really quick. Just some quick summary of that. But this is the quarter 3 numbers. Then the quarter 4 guidance, they have at least $840 million going forward, and which was 18% better than consensus of 830. So right, they're already starting to beat numbers, right, in a way. This person's saying they're seeing reactions over about Amazon, the competition from Amazon, but they're going to talk about that later, so we will. And so it's saying, if you look at their year-over-year growth, right, it doesn't look as good, right? Last year was 27% and this year was 17%. But I guess if you take away the political, right, all the politics and stuff and the ads that run, this was actually a 22% compared to the year before. And then this would have been also 22% of the year before if you don't account for all the politics and stuff like that. Here's the thing, though. That's just reality, right? Politics is going to happen. What's happening in 2026? We have elections, midterm elections. And look at this. Look at how long this is, right? All the way from March 3rd to November 3rd. And who's going to benefit? The Trade Desk. They're going to benefit off it, right? So even though, yes, this latest one doesn't look great, this next year is going to be amazing, right? They're going to have all kinds of political ads being spent for them. So I don't know. I think it's just going to be, this is good for them. Let's go. This is not what I really want to talk about. They talk about how the company works, right? How it goes advertiser agency and how it works. Competition issue. So the revenue growth slowdown, not much. Continues to frame advertising market as a battle between the open internet, where the Trade Desk operates, and conflicted walled gardens. The Trade Desk objectivity is its North Star and greatest weapon. Google, excuse me. Google is clearly focused on search, their AI chatbot Gemini, and YouTube. Amazon's primary advertising efforts are focused on growing sponsored listings and then secondarily Prime Video. Both are putting Amazon-owned and operated inventory first. Facebook continues to focus on monetizing Instagram and Facebook as destinations, and TikTok is the same. None of these companies are focusing on monetizing the open internet. So this is yes and no, right? When you think about all of these companies that advertise stuff, they really advertise a lot of their own stuff. Now, Google, right, YouTube, they do advertise other stuff for sure, right? I see all kinds of advertisements for other stuff. Facebook, they do other advertisements, but I would definitely say Amazon is a big one where if I'm seeing advertisements, it's all about stuff they probably own, right? It's all Amazon-owned stuff. So it's all in their own, ecosystem. So it's not as big of a competition, right? They operate in different operate in different segments, right? So the Trade Desk really operates in a different way. So it says right here, exhibits and industry experts estimated that in 2019, the open internet and owned and operated inventory on YouTube were equally split in share of wallet TV360. However, between 2019 and today, roughly all incremental dollars in growth from DVD has gone to YouTube. YouTube spend increased by 800%, while Google's buying of the open internet stayed essentially flat. This confirms a core thesis. Google has largely abandoned the open internet and has created a vacuum that the trade desk can fill. So Google has not taken in any more from the open internet, right? So you have to look at the trade desk really operates the open people, right? All these open businesses, all the other companies and advertisers. Google has not accepted anymore. They're not trying to grab anymore. They're not trying to do anymore. They're done, right? But they're still continuing to raise their ads and do all that. So essentially, other companies are not taking in any more. They're boosting their own services, their own companies that they buy and stuff like that, right? So that leaves the trade desk open for all these other companies that have to come in and market their stuff. So, you know, that's what I love about it, right? This is a bunch of their, you know, we buy the whole internet. This is them now. They really do. They have their hands in everything. So I'm not too concerned about that. You know, if we really just look at their numbers, I mean, look, this is what their revenue is scheduled to look at, right? To look for, right? In the next coming years, right? 2025. Well, this is basically for this year, and then 2026. I mean, we can estimate. It says 2.89, but it's might be more because they're already, you know, they've already but they estimate, you know, 18% more than what the consensus was for the fourth quarter. So they're probably going to beat on the yearly as well. If you look at their financials, the revenues just keep going up, right? 2022 hit, the revenues kept going up. It doesn't matter what year, they keep going up. The revenues keep going up. The profits keep going up, right? The net income, which is really the big one, keeps going up. Now, obviously, they had a dip 2022, as most people did, but they keep going up. 2021, they also had a little bit of a dip, but their income has just completely gone, you know, insane, really, when you look at the past, just 2 years ago, right? It's over doubled. If we look at their balance sheet, look at how much assets they have, right? They have $5.9 billion, and their total liabilities is $3.3 billion, right? So they have $2.6 billion in equity, right? Their cash flow. Now, one thing that I really do like, when you look at the cash flow, when you see the net change in cash, you see this number. Wow, it looks really small. The net change in cash right here, it looks small, or that looks bad. That like $568 million, that looks bad if that's how much you know in change of cash, right? Because all of this, you know, they're bringing in cash all these other years. But why? What was the reason? They were repurchasing their own stock. Look at this. Over $1.1 billion. If you take away that, they have, what is that, almost $600 million in cash. Right now, obviously, they've always repurchased a little bit of stock over the last few years, more so, obviously, you know, it's clear. But so much in this last year, they have repurchased so much stock. That's going to drive the EPS, earnings per share up, and the PE down. And, you know, yes, the net change in cash, but their assets versus liability is great, right? They have plenty of cash. They have cash, right? I mean, let's go back up to the cash, right? I don't know if it was too small to even see. Total assets. I mean, they have $5.9 billion. Let's see how much cash they have. at 653 million, right? And you could see that they're, in 2024 they had 1.3 billion, and now they have 600. So they're buying a lot of their stock back. They believe in it, and I believe in the company as well. There's other statistics I can go over. It's this is Christmas time. I'm not going to get too much into it. It's already 15 minutes into this video, so there we go. What am I doing here? Hey, we got the snow going again. I did want to show you the chart again, though. All right, I don't know what happened. My camera shut off. It froze for a second, so I don't know exactly where it left off, but I do want to show the chart one more time because I do think it's very important to check out the chart. It's gone down 72% since last year, about 1 year and 1 month ago, December of 2024. So we want to look at this chart because ever since it's gone public, if we look at it from the beginning, it's done significant. It's done great, right? It started around $2 or something like that. Now it's at 38 over the last 8 years or so. That's pretty good. But as you can see, I love a stock that you can go back and you can buy it, 5 years ago, and it's about the same price. Now this one is about 5.5 years ago. You could have bought it in June 2020 at about $38. So if you have bought the stock at all after June 2020, you've lost money in this stock, which is pretty crazy to think about. But that also leads that all that does really is give other people the chance to make money, right? That gives all of us a chance to make money. Now it sucks for some people that have held on to it for this long, and right now they're looking at a loss, but it doesn't mean that they're going to completely look at a loss, right? In 5 years they could be looking at significant profits as long as they don't sell. So what I want to look at really quick is why did these drops happen and why is it where it is today. The drop right now recently is really because of their AI system that they had that wasn't doing very well, but now it's doing very well. And again, it's not like it made them lose any money, right? We went over the numbers. They were making plenty of money. This back here, this was 2020. This was COVID, right? So after COVID, everyone went crazy. This was just like a little exhaustion phase. We had to take a break. And then this was 2022. All of this was 2022, right? Insane. And then this was 2023, a little bit, just not a great time. It went down about 30% over, about July 2023, about 6 months. And then it continued to find its way back up. And then it had its AI issue, which has been really overstated. I mean, this was the beginning of the year with tariffs and everything. I mean, everyone thinking, people are not going to advertise and all this stuff, right? Because, it's really heavily, the trade desk is heavily on, the economy and, businesses needing to market and advertise, right? But you look at their numbers, they keep going up. If I start to see the trade desk revenue go down, then that's a concern. Let's look at this really quick. Let's check this out. Because their earnings over all of these years, right? Look at this. Never went down. Year over years, never went down. We have the biggest, inflation that we've seen in 50 years or so, and the numbers were significant. They were in the 30 to mid 20s. They haven't seen the teens until recently. They're recently seeing teen growth, but that's because, the numbers they're trying to compare to are still pretty high. Look at last year's, the growth was significant, obviously, because we had big political ads. So when that happens, you're going to have the year over year look a little bit less. It's harder, but that's just going to, whatever. But because this year wasn't as good, next year is going to be crazy with these midterm elections. I just think there's going to be a lot of advertisements being spent. or a lot of money being spent on advertisement. So that being said, I'm looking at this chart. It's down 72% over the next, couple days or whatever here in December. It's not going to really go anywhere because, it's going to be tax loss harvested. People are going to be selling this thing. Almost everyone's lost money on this. If you bought at any point before a week ago in this stock, you've lost money. So people are just going to, hedge funds are just selling it. But basically at this point, everyone who has sold this stock, who for tax loss harvesting purposes, they've already sold it. They're not going to wait for next week. So I'm looking at the trade desk as a stock that can go up 100% in 2026. That is my personal opinion. So looking at it right now, what is that, 38? I definitely think it could hit 76 by the end of next year, possibly even $100. So that could be 2.5 times, almost 3 times, what it is today. So again, thank you for watching. Please give a like and subscribe. I know my thing froze for a minute. I'm going to have to now go and edit the clips back. Great times. But still got to make that money. Still got to make these videos. Always be prepared. Don't be scared. And never forget to earn it, save it, invest it, buy low, sell high. I want assets, not liabilities, and you can count on compounded interest.